That said, let's focus on a good result today. JK Tyre reported a healthy set of numbers. The India business has been leading the growth. The Mexican business as well delivered a steady performance. To discuss this and what's the way ahead, we're joined by Anshuman Singhania, the Managing Director at JK Tyre. Hi, Mr. Singhania. First of all, good morning and congratulations. A good showing. The street likes what you've delivered. I want to focus on the profitability aspect.
Thank you for having me on the show.
It's a pleasure, Mr. Singhania. Let's get a couple of numbers out of the way, though. The margins, that's a pleasant surprise. You've delivered close to around 13% in terms of EBITDA margins. Even your gross margins, they as well are looking quite good at around 39%. Now, we know that raw material cost has perked up a little bit. What's the sustenance in terms of both these two numbers, EBITDA margins as well as gross margins? Please go ahead.
Yeah, sure. Indeed, JK Tyre has done well. Our margins have definitely expanded based on the raw material decrease, plus our push on premiumization. Our product mix has enriched, and we have also got a lot of excellence in our operational excellence as well. So going forward, it looks like the demand is going to be steady thanks to the GST and the general sentiment which is picking up in the rural segment. And there has been an uptake in the overall automotive industry. So we are very much hoping that for the full year, going forward, H2 should be looking good.
Okay, all right. So you believe margins could sustain around these levels, in the vicinity of these levels?
Yes, margins would sustain in this level going forward.
All right. Let's focus on the larger part of your business and the India business. You mentioned 15% volume growth in the domestic market. Could you tell us where's the strength coming from? The replacement market, the OEMs, if you could give us a brief idea in terms of demand trends?
Yeah, sure. So we did a double-digit healthy growth in our domestic market, and our products like truck radial and passenger saw a very steep growth in terms of the volumes, and even the farm, even in the OE and the replacement, did exceptionally well. So we see this growth being continued. At least in the next quarters as well.
Anshuman, hi. Good morning. Great to have you on the show, Surabhi here. Can you expand on that point? Because that's really not a million, maybe $1 billion question. Whether the post-GST cut pop, this festive pop that OEMs have seen, whether this is really going to be a lasting trend for the coming many quarters. What's your sense? What are your channel checks telling you? And between the two markets, OEM demand and replacement market, for the second half of the year, what will the trends be like in both of these segments? And just break down that volume estimate. You're saying 15% volume growth. Where will it really come from?
So I think starting from the OE, in the CV market, which was very much muted, we are seeing a mid-single-digit growth coming in from there. In the passenger, we are seeing a strong single digit or a high single digit coming in from the passenger as well. Even in the tractor, we are seeing a good, strong single digit to a double digit growth coming in. So overall, the automotive industry looks healthy. So we are seeing a 7 to 8% growth in the automotive industry coming in. In terms of the replacement market is buoyant because of the GST. I believe that the dealers have flushed out a lot of inventory. So that gives room to the fresher sale. We have seen a strong number of TBR volumes grow by 22%. We've seen in our passenger line volume, which grew by about 16%. So that's all indicating a healthy double-digit strong growth. And with our new introductions of products and going into the white spaces, I'm sure we'll be able to keep up this momentum very strong.
And would it be possible for you to share roughly, if you talk about the total top line, what is the breakup between OEM and the replacement market for you across the portfolio?
So the replacement would be about 60% and 40% would be the OE.
And you would expect this ratio to continue even towards the end of the year, the 60-40?
Yes, we would continue. We see that to continue in this proportion.
Okay.
Mr. Singhania, morning. One question a lot of investors keep asking is this GST-led boost to demand durable across categories, cars and everything across the board? So if I were to put that to you, because you would get a sense, right, from OEMs, how they are planning, because if they're seeing demand ahead or not. I mean, how would you answer that?
No, definitely the GST has given across the board a good boost to the overall sentiments of, and hence the demand across the sector has picked up. In terms of we seeing the robustness in terms of the OE, whether it is the CV or the passenger car vehicle, which is in terms of good production numbers which are coming our way. We are the largest in the truck radial space where we are catering to the OEMs. And we see a good boost in the entry-level vehicles also coming in the car. And I think that is going to be playing out going forward in the subsequent quarters as well. So overall, we see a healthy growth which is going to be coming in from OEM. And
so November, December, I mean, this will sustain. That's my question. Or you think once again from inventory getting corrected, you'll end up in a month or two, you'll end up with a situation of excess inventory. That's the fear.
No, actually, the underlying demand has been very good. In terms of the rural demand, which is picked up, also the infrastructure push, which the government has been doing, that is leading to a lot of demand generation, especially in the trucking segment as well. And there has been a boost in terms of the cars as well. So that sentiment combined with rural sentiment, which we are seeing in the farm and the two, three-wheeler. So that is a good indicator that it is showing that it is going to be continuing going forward.
Okay, all right. Anshuman, we'll leave it on that note. Good quarter, and you're expecting it to be a good second half as well. Shareholders will definitely hope it plays out that way. Thank you so much for joining in, and all the best for the rest of the year as well.